national average for a gallon of gas sits at $3.84 per gallon. Meanwhile, the average in Texas a little lower than that at $3.44. And as we're used to seeing here in the borderland, the average...
In recent times, a sudden surge in gas prices has ignited concerns among consumers and policymakers alike, sparking discussions about the stability of the energy market and its potential global economic implications. Reports spotlight a significant decline in global fuel stockpiles, laying the foundation for a potential energy crisis. This predicament is further amplified by an ongoing imbalance between supply and demand, driven by diverse factors including OPEC+ production cuts and the resurgence in travel during the summer season. How will the impending hurricane season impact gas prices and the energy markets? There is a discernible departure from stability in the area of rising petrol costs. The nation average price for ordinary petrol jumps dramatically in a single day, reaching its highest level in a year, and ends a period of rather stable fuel prices. Experts sound the alarm for a potential 34% increase to $5 per gallon by autumn, exceeding the data from the year before. Notably, this price increase affects premium petrol as well, with average prices in California reaching an astounding $4.95 per gallon. The complex interaction of these factors triggers a cascade of events across the energy landscape, having an impact on both consumers and economies. Delving into the intricate mechanics of rising gas prices reveals a convoluted tapestry of factors, each contributing to the mounting costs. Central to this is the surge in crude oil prices, showcasing a notable 10% surge in merely a month. This surge is intricately linked to various variables, encompassing OPEC+ production cuts, sanctions targeting major oil exporting nations, and the revived travel demand in the summer period. As OPEC+ persists in curbing production and Saudi Arabia mulls over additional cutbacks, the disparity between supply and demand broadens, propelling the upward trajectory of both crude oil and gasoline prices. The slight yet significant effect of temperature changes is an intriguing factor causing the increase in petrol prices. It should be noted that variations in temperature have a significant, albeit indirect, impact on this surge. Summer heat waves cause energy use to increase as people seek relief from the heat by using air conditioning. This increased demand puts a pressure on energy supplies, which leads to higher energy expenditures, including petrol costs. Additionally, because of safety concerns, oil refineries choose to reduce production as a precaution due to the high temperatures. This allegedly protective measure, implemented to ensure operational integrity, unintentionally leads to a reduction in oil inventories, amplifying the upward pressure on prices. With the continuous heat wave as a backdrop, there is a noticeable change in the utilization of refineries in the United States, with significant effects on the Gulf Coast's oil infrastructure, which serves as a hub for refining activities. The next storm season simultaneously puts an even more complex shadow on this situation. The threat of storms has serious ramifications for the oil industry, as it will likely cause delays in the shipping, refining, and production of oil. This vulnerability exacerbates the current energy situation, raising the possibility of severe supply gaps and promoting sharp price increases. Looking ahead, analysts predict that petrol prices will continue on their current track, with the possibility of another 25% increase waiting just around the corner. This estimate captures the stark and persistent mismatch between supply and demand, which is made worse by the intensified consumption habits typical of the summer. In the current context, gasoline prices have surged and are anticipated to reach the highest levels for a Memorial Day weekend in 7 years. The current average price of $3.04 per gallon has risen by 16 cents in the past month, significantly surpassing last year's levels. These price hikes coincide with the expected surge in summer travel as the economy recovers from the pandemic. However, uncertainties persist, with events like the Colonial Pipeline ransomware attack causing supply shortages and panic-driven price spikes in certain regions. As the summer unfolds, average gasoline prices could range between $2.75 to $3.25 per gallon. The escalating demand, coupled with potential disruptions in the system, whether due to refinery outages or hurricanes, might lead to further price spikes. While the Energy Information Administration predicts an average of $2.92 per gallon for the summer driving season, experts caution that supply strains and unforeseen events could maintain elevated prices. Considering the ongoing recovery of the U.S. economy and the growing demand for fuel, the latter half of the summer could witness even higher gasoline prices. Despite hopes for relief, the situation remains complex, intertwined with global factors that may pose challenges in navigation. As economies strive to find their post-pandemic footing, the energy market's volatility underscores the intricate interplay between supply, demand, and external factors shaping our energy future. The average price of a gallon of gas is expected to rise by 10 to 20 cents nationwide by August, according to the American Automobile Association, AAA. The trade group reported a 40% spike in the national average gas price from $2.25 to $3.13 between January 1st and July 6th. It projects a further increase of 10 to 20 cents by summer's end, potentially leading to a national average of $3.25 per gallon. Jeanette McGee, a AAA spokesperson, attributes the surge to robust gasoline demand and more expensive crude oil prices. While hopes were held for relief through increased global crude production, failed OPEC negotiations have set the stage for crude prices to surge to a 7-year high, likely driving further gas price increases. The recent decision by the Organization of the Petroleum Exporting Countries, OPEC, to cancel a meeting with allies, including Russia, has further contributed to the uncertainties in the oil market. Amid Republican criticism of the Biden administration's handling of gas prices, White House Press Secretary Jen Psaki emphasized that gas fluctuations are influenced by multifaceted factors beyond any individual president's control, underscoring the role of oil supply availability. In conclusion, the recent spike in petrol prices has highlighted the complex interactions between supply, demand, geopolitics, and disruptions caused by climate change in the energy sector. To create a sustainable and reliable energy future, cooperation between governments, businesses, and consumers is crucial. The wide-ranging effects of petrol price increases highlight the need for swift collaboration between policymakers and industry partners to develop long-term solutions. Governments must expertly negotiate the complex world of international energy markets, which are influenced by production shifts and climate concerns, as consumers struggle with acute cost implications. This crisis serves as a harsh reminder of the necessity for flexible policies that are equipped to handle and mitigate future instances of comparable circumstances. To effectively address the problem, spanning borders and promoting a unified response, international cooperation is crucial. As joint efforts hold the key to a secure and sustainable energy future, please share your thoughts in the comments below. And don't forget to like, share, and subscribe to remain updated on changes in the energy sector and other important global topics.